Hey everybody, welcome back to week 20 of our trading watch list. Can't believe it's been 5 months since I have been doing this series now. So as usual on this episode, we will go through last week's trade and what are we watching for next week. If you are interested in selling options to generate a robust income stream in addition to your main income stream, this is the video for you. Make sure you like, subscribe to the channel and save this watch list and come and join in this vibrant community. So without further ado, let's dive in. Let's go over the last week's performance for S&P 500. Overall, a pretty mixed bag, I would say. The technology was up. Semiconductor had a very strong performance. Nvidia was up almost 10% for the week along with Broadcom. AMD 2 weeks in a row has had been stellar performance, was still up almost 9% for the week. Energy sector was hit the hardest, I would say. Energy was down all across the board. Tesla was also down and a little bit of a mixed bag in the health sector as well. Now for next week, what you would really want to watch is the core inflation numbers coming out. Forecast for core inflation would be about 4.1%. Last time it was also reported as 4.1%. So same forecast coming in. As of right now, the target is to be about between 5.25% to 5.5%, about 91%. This may of course change down the road, but most likely December will also remain as a pause. Let's kick it off with our trade recap for last week. The first one is SLB. We had an open covered call on SLB for about $58, expiration November 10th. You can see from the screenshot, it expired worthless. So as of right now, we have generated $316 on the SLB campaign and currently we hold 100 shares. So the idea is we will continue to sell covered calls on SLB until the stock gets called from us. SLB was progressing nicely until the last 4 days when energy stocks across the board were hit the hardest. We saw this gap down right here for SLB. This particular candle, you can see this is where the doji candle where the market was undecisive on this particular stock, and then we saw a little bit more strength on Thursday, and then with Friday we still closed above the 200-day moving average. So in the short term, it definitely looks like a positive momentum. See, most of the volume is right around this frame here, and then some more volume starts to come around the $55 level. So what are the things we can do with SLB is we can continue to sell covered calls. As you can see, our cost basis is 55.83 and the stock is around 53. So even we sell a 56, we are only going to get about $11 for this trade. So what we can do is we can take a look at 4 weeks out at 58. We would be getting about $32. So really not much we can do until the stock actually comes back up. So what I'll be looking for next week in order to get into this trade is there are a couple options on the table for me. Number one is wait and watch how the stock price behaves. And if it can hit above the 54.90 and if we can have a strong day, I can take a look at selling either a weekly, even monthly, or even like I can go out like maybe 90 days out for 58. We can see we can sell it for about $100, $200 or something around that. I generally don't like to sell leap calls on stocks that I generally don't want to hold for a long term. This was a more short term play for me. So I may look at selling a covered call maybe a month out, maybe a 2 month out. The next trade that we had was one of Warren Buffett's favorite energy stock, which is OXY. It's Occidental Petroleum. If you follow me on Twitter, post OXY earnings, I had posted the summary of the earnings. On top of it, I also provided my updates on the 2 CSP that we have open. We had a 62 put for November 10th expiration. We had 59 put for November 10th expiration. And then the next day I gave an update that my 59 put was up 92% and my 62 put was up at 9% on November 8th. So what we did with our initial trade was when we bought the CSP, we got about $103 as premium. Now, because the stock actually dipped below the $62 level, we had to roll it out so that we don't get assigned. Since we already own SLB, I don't want to own another energy stock in the same week of the trade. So what I did was I rolled that contract out. To roll, I had to pay $90, but I also got $130 back. And on the campaign for OXY, currently we have about $220 in this campaign that we have generated. Our current stock price is at $60.98, which is almost $61. So we are very close to the $62 level. If the stock can hold to 62, you can see there is actually a lot of momentum. The volume is actually lower at 62 as compared to 61. But as the stock picks back up, we will see a lot more volume coming in at these levels of 62.95 to all the way going to $63. So we have a very good chance if the energy sector can pick up next week or so, we may be able to have the contract expire worthless. So apart from these two energy stocks, the third energy stock that I'm actually looking forward to is ExxonMobil. As you can see, ExxonMobil has not had the greatest last few weeks. It's been sliding downwards a lot. But on this trend, we saw the stock actually coming back and closing above it. It dipped below on the last trading trading day of the week, and it actually bounced off it. So that's a good sign. Also on the weekly, we see a similar trend. We saw it, the solid bar for the week. It hit this trend line and went back up. The stock is still in an uptrend. It continues to make higher highs on the weekly and lower lows on the weekly as well. So far, I'm bullish on ExxonMobil from a long-term standpoint. If I'm going to look at getting into ExxonMobil, we can see at this level around the 103, 104, we have a decent amount of volume. This goes down, then you are going to get some volume around the $101 level. So at 101, you will get about for the week about $50 or so as a premium. If you go 2 weeks out at 101, you'll get about, let's say about close to $85, $86. Delta would be 32 at 101 for 2 weeks out, and delta would be about 27. So the risk is not going up that much. The delta remains pretty similar. If you go 3 weeks out at 101, you are looking around the 34 delta, and you will be getting about 129. So I may look at opening another cash secured put at between 101 or 102, unless we have some kind of a major news around the energy sector that, you know, pushes the stock further down. Then in that case, we have to remember that 99.56 was a major support level, and we may see a lot more buying coming in at 101. So this is a very critical level for the stock. You do see a lot more volume here compared to other price points, and with 99.56 as being a long-term support. The next ticker that I'll be watching for next week is also Tesla. Now there is a news that came out, and a lot of people are talking about that possible bearish signals with Tesla insiders disposing stocks. So this is basically that news article that is being talked about on Yahoo Finance by Simply Wall Street, and they have these multiple transactions in the 9 to 12 months. They have had so many transactions over here that insiders are actually selling the stock. Now don't get me wrong, this is good to know that insiders are selling the stock, but there is an important metric that you need to understand. 12 months, we have had 67 transactions, so 3.64 billion of investments have been sold in Tesla. There hasn't really been any buy on Tesla. If we take a look at the last month, we have had 5 transactions. So the SVP has sold, the CFO has sold, and we have had a couple other sell. But what you also need to understand that how much these guys actually own Tesla. From a percentage of holding company, which is this metric here, the SVP David Andrew Baglino holds 0% of the company. You have the CFO, which is Vaibhav Taneja, holds 0% of the company. So these folks, even though they are exercising their options, they're selling stocks, they don't hold a major amount in the company. So the main people that actually hold the majority is Elon Musk. So until you see Elon Musk selling out, unless he's starting a new venture where he needs the cash, just he did it for Twitter, that is when you can see some weakness in the stock price. But overall, I wouldn't be worried, and I wouldn't pay too much attention on this particular news that insiders are selling out of Tesla. So with that out of the way, let's look at Tesla. We had this major gap down right here. So we would like to see that Tesla is able to fill that gap up, and that could be a potential play for Tesla in the coming weeks or so. Now, if I want to get into Tesla, the reason I love playing Tesla is because of the elevated premiums that we get. And as I said, I always tend to be between the 15 to 25 delta. If I want to do a weekly and I want to acquire the stock, I'll be around the 30 delta. If I don't want to acquire the stock and I just want to collect premium, then I'll be between the 15 to 25 delta. That's generally how I tend to trade. We're looking somewhere around the 200 level. This has been a pretty decent support level on the Fibonacci, and we also have a decent volume at 200 because 200 tends to act also as a psychological support level. We did see a bounce. It dipped one day below it, and then it just bounced back up, and we saw this little gap up, and then that gap up was filled. So we may see a similar trend that eventually this gap up will be filled out. Now, not necessarily all gaps are filled. Generally that happens, but it's not a guarantee it will be filled out. You can take a look at 24, so 205, you may collect $200 right around here. You can of course go out 4 weeks in advance, and then that is going to give you a lot more premium. Around the 200 delta, 4 weeks out, you will be getting about 475. This is something that I can take a look at it. This can help me roll contracts a month out and still collect $400-500 as premium. Now keep in mind that we also have a Tesla campaign running, and so far in Tesla campaign we actually own 100 shares of Tesla. With net premium we have collected so far is about $2,235. Our cost basis is $265 original with an adjusted cost basis of $242. Another ticker that we are going to talk about is Square. You can see on Square we had this gap up right here, and the stock actually did pretty decent for last week. If I want to trade this at these levels, I will be very careful. I would want to see if Square can actually make the 49.04 as the support level before getting into it. So in that case, if 49 is around 18 delta, that is something you can take a look at it. You'll get about $30 or so for this premium. You can go out a month and you can probably get about 117. The delta would be right around 30. I'm still not very confident. I want to see that they create a good support level here and they are able to bounce off. Now, if the 20-day crosses over the 50-day moving average, then that will create a golden cross and we may see a little bit more volume coming into buying. But at this point of time, even though they had a very good performance on the earnings report, I would still be cautious on this particular trade for next week. Feel free to pause the video here. These are the couple tickers that I generally track. We haven't looked into Shopify in a while now. We haven't done Intel in a while now. We also have Datadog and a couple other stocks that I tend to trade throughout the week. So if you don't want to miss any of those videos, make sure you hit the like, click on subscribe and ring the bell notification. I will see you next time, Investor Family, but don't forget to invest for tomorrow.